Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So here we are. Some faulty signals, some cracks starting to knock down some pillars of this, bull phase we've been in since the double bottom, earlier this year. It's been kind of methodical, not obviously clear cut. Nothing's ever clear cut, but over the course of the past few weeks, we've seen, step by step, some of the momentum leaving. 2 weeks ago, we started to see some of the big name technology stocks come out with, lukewarm to bad earnings, whether it was Google, whether it was Microsoft, whether it was Netflix, whether it was IBM, and some other names not even in tech. You had the Qs actually start to the downside, which is never a good thing for, for the overall market. Here was your shot across the bow when, the Qs went below this 109.80 and then basically never reclaimed it. So that was their first sign. And if you think about the Qs were below the 8 and the 21 day back on April 22nd. So on April 22nd, the Qs were already in a situation where it lost momentum. Okay, now here we are where it's trying to hold, a support below the 200 day. So just to show you how things lead other things, this was April 22nd, where basically, you could have said, okay, let me be on lookout, because if the Qs are doing this and technology is going lower, the S&P, it's just probably a matter of time. Okay, and then and then the 26 is when more weakness set in. So if we go to the chart of the spiders, okay, to try and connect some of the dots, the spiders, here was your upper trend line, okay, and right here you're still, this is April, where's April 22nd? April 22nd, you're still above, okay, the 8 day, so it's showing some signs of of not breaking down yet, but how long could that last? So you had to be on lookout. And then basically this was your, okay, let me get out of Dodge. This was April 28th when we broke below the 8 day with some authority, and that was last Thursday and wound up leading to a move down to Friday's low. Okay, yesterday you had the sneaky move where it came up, closed on highs, and some guys who are looking to maybe re-short were waiting for an up open today, which we didn't get. And some guys thinking maybe we're okay, have a few longs on, how to deal with, today's action in order to figure out whether or not you could salvage trades or just, or even make some money. So anyway, just to go back to it, just to show you like how to connect dots, this day was April 28th, so I bet you the Qs were breaking even lower. So here was April 28th, so look at this. So you had, on April 28th, you had the spiders just started to break the 8 and 21 day, and here the Qs were getting downside follow through below the 200 day. So it shows you how, this kind of led the market down, and obviously big holes in a lot of the earning stocks, were a culprit also. So now what do we have here? You have 104.88. We'll see what happens, in the next session or so moving forward. And here on the spiders, still kind of hanging in there, I guess. We had the same similar setup here, but we were above the ascending channel. Now we're on the right side of the ascending channel, where it wound up rallying anyway. But at this point, I'd just be a little skeptical. We are now below the 8 and 21 day. We've been above the 8 and 21 day pretty much since February 22nd. So when rallies change a little bit and momentum, kind of changes, you got to change also. So we'll see what happens, in the next day or so. Moving into stocks, we know the stocks that we think, are in the game for potentially higher prices. You had Amazon. And Amazon, I wouldn't say it's end of the world. It's still above the gap. I don't like the fact that it didn't go green and let traders have a way out. So, you got to be a little careful here. There was a little midday rally, but it didn't amount to anything. So if you're long Amazon, make sure this is your stop. I was in Facebook. It didn't really, fall apart. But I just didn't take it home overnight. I figure I'll wait to see what happens tomorrow. It's still above the earnings gap. I feel like we'll still have a chance to buy it. If the market hangs in there, we need some leadership, maybe it'll go. But for today, I just felt like not taking it home again. I was in it last night. Gave me a decent way out. I lost a little bit in it, but it wasn't the end of the world. I also had Apple, but Apple actually made some good money today. I probably would be in Apple still, but there was some report that they lost their iPhone patent for something else besides cell phones, and I just got out of it. Didn't feel like having the overnight exposure again. But this little move above this 2-day pivot is what we talked about in the morning call, thinking that I was actually buying it when it was down before the morning call, and then gave you a nice push above this, and we'll see whether or not it tries to work its way back up to the 8-day. But all in all, it better get out of this spot, because if it doesn't, bets are going to be off from the long side if this 92 area gives way. So you look here, it's so oversold from when it broke the 200-day, but doesn't mean you have to be so overly involved. It was a good trade today with him going on mad money. You figured, they would support it, maybe have that buyback machine on, to make Tim not look so, like he didn't get, some love from investors, etc. But we'll see what happens tomorrow moving forward. Elsewhere, high beta tech's really just not special. You had a little bit of a bounce yesterday and not much thereafter. Netflix went, positive for a second and then kind of fell back off. Still, very broken. Still has a huge hole in the chart, but sorry, hold on. Nothing so special. I guess you could say if you're looking for something constructive, it is still within this range, and we'll see if there's a trade there, in the next day or so back above it. Google did a whole lot of nothing, after its bounce, still, below every moving average, and the longer it stays below this little pivot, perhaps, the higher percentage that it doesn't hold this, lower support. So make sure that, if it doesn't build another bear flag to continue down, here's your hole. So again, Netflix, Google doesn't look great, Apple doesn't look great. Microsoft, after its bounce yesterday, open lower, didn't let people out, still below the 200-day. My rule, the longer you stay below the 200-day without it being a fake out, the better than average chance it could head down, and you still have a huge hole in this chart. So nothing to be so excited about there to sit in it. The bios lost momentum when it broke below, this spot here. Again, when you're above the 8 and 21-day moving average, you look constructive. It was above the 8-day moving average this entire time, and then it broke below this 283 right here. Okay, so if you traded no, actually, this is 285, very tightly, this was really your spot then. Okay, and then if you got out of, when it went back below this 278, I actually did it at 283, you didn't, get involved in this mess. And now it's trying to hold this lower spot, but, pretty much no reason to be overly exposed. There was, I guess VRX had a decent trade today, still very, very broken. There was some volume, I guess, got, Fitch or whatever said that they upgraded their stature, so maybe if you had to be in something overnight, even though there's so much headline risk, maybe VRX is worth it. I think Mark is in some, so I was thinking about it, I just didn't take it. Some think that today could have marked a low in the dollar, which maybe. So I actually, since I'm not really a currency trader, I bought puts in the FXY. So if you look here at the FXY, well, this really doesn't correlate to the dollar, but if they do something with the yen, okay, here is a move that it just went from here to all the way up there and opened up and reversed. Maybe the Kuroda does something to bring this in, which they need to, and that would be somewhat of a profitable trade. Either way, it's well above the 8 and the 21 days, so not something to be long. You have to wait. Same reason why I sold my GLD yesterday, not because I think gold is done, but look how extended it was from the 8 and the 21 day. I was thinking it could do some sideways work here. Also created that call spread, so now I have no stress in the options, and the longer it stays above here, the more premium I collect from the 124s, and hopefully it sticks around here and doesn't fall back too much, and I don't give too much back from the 120s. But we'll see. I'm not getting in there yet. Some guys are trying to figure out, do they buy the miners yet? I would wait. I know a lot of guys had a cute short yesterday when it opened up and failed. Okay, and then, I got to give some credit to some guys in the chat. They held it through today, and now they have small overnight. I would think, if you're going to be trying to be long this, I would wait a little bit. This had some nice setups. This was a good setup. This was another good setup, and now it seems as if this is catching up. But to buy it on the second down day, sometimes they don't give you a third, but you have to really love the miners, and I am not in love with the miners. I just like to trade them when they get pretty extreme. And yesterday we caught a good trade in the Nugget. On the bottom of my note, I talked about fading the miners or the Nugget, and I think some guys did it for the first time, and if you did it, you made a lot of money. Okay, I made a little money. I didn't stick around for today, And this too is getting to the spot. So down open, maybe it's worth a little, scalp long here. Maybe you get a red dog reversal tomorrow around this pivot, which stands around 101.13. But again, it's really extended from the 21-day. Look how far it's come from 20 since February. Wow, February, March, April, May, in 4 months, it's up 400% or so. So just be careful. It's getting a little loose and wide here. And all in all, just to make a long story short, I feel like the markets have lost some momentum. It's been pretty methodical. I wouldn't say there's fear and the VIX isn't spiking and people aren't talking crash, but whenever you're in for a reason, one of my rules is above the 21-day, you try and be long, maybe have a portfolio approach, but below it, you be a little bit more tactical and make sure you have a reason to be in something, not just in it because you think the market's going higher, because at this point it's hard just to think the market's going higher based on some of the pressure that we've seen, so you have to be a bit more careful. And lots of the peak earnings are behind us, and I don't think they were great. I think there have been more damage done to leading stocks versus stocks that are ready to break out and go. There's only so far you could have laggard groups supporting a move, like the energy sector and the bios and the banks that looked decent yesterday became a problem today because all the European banks were down. If you look here at the XLF, still holding in there, but you have to be a little bit careful, where if it gets back below this spot, I would think most momentum guys would leave. Goldman Sachs looked as for a second that it engulfed this whole lower range and still hanging in there, but not like we like to trade the banks when you have like a big up day like this and then you get another trade through this and you get 2 days in a row. Fun. When it gets choppy like this, when market doesn't know what it's going to do, you could really wind up driving yourself a little nutty. So at this point, it's still going sideways, hasn't fallen apart, but not looking like it was ready to break out above a level with a catalyst and give you a quick, fast money trade. So we'll see what's next there. If it starts falling, lower, it's going to be pressured. Lastly, oil. I talked about whether or not it could come back to the 21-day, and it's pretty much coming in there. Inventories, I think, are soon, maybe tomorrow. I'm not sure, but it broke above this spot, couldn't hold it, and now we'll see whether. Let's see, this type of trend right here holds in there. If this doesn't hold in there and the dollar really, continues from what it's engulfing they did today, maybe, you have to be a bit careful. Let me go back to, so the UUP, what does engulfing day look like? Kind of like this, makes a low, closes above a prior day's high. That to me, if I was short the dollar, I would probably have covered, but it doesn't necessarily mean it's a screaming long. But potentially you look at a day to take notice like this and you figure out maybe if there's any commitment to it. And that is that. I'll see you tomorrow. Have a great night.